Hi guys. So I've spent the last 5 minutes doing a little bit of analysis on the S&P, just trying to work out what direction or the likelihood of which direction we might go in. I'm not biased either way. You see, yesterday we had the daily. This is the daily candle, and it's an indecision candle. So obviously we've got the long wick to the bottom side, the long wick to the top, and the small body. So that says, the market doesn't know in which direction it wishes to travel. If we drop down to the 30 minutes, okay, you see here a wedge becomes clear. We've got the top side of the wedge, sort of bottom side of the wedge, which is sort of coming to an end as the 5-day moving average catches up. So all this is liquidity building. And if we were to break the top side of the wedge, then we could have some good price action to the upside. We have got a few daily resistance levels ahead, but hopefully the liquidity that's been building is strong enough to sort of push through that. If we were to break down below the 5-day and sort of to the bottom side of the wedge, we've sort of been channeling in that direction, but I don't think the sort of selling price action has the potential to be as strong as the upside price action, the bullish price action. Another thing to note, let me just put on a drawing tool. Okay, so we've got this cup, the handle coming to an end with the wedge, just to make you aware of that. Let's see. This candle here looks like it was a testing candle potentially. Let's see. So obviously what happens, as I say, obviously, maybe it's not obvious, but when the insiders sort of build liquidity, they will test that liquidity to see if they've soaked up the sellers. So they'll start the price action pushing up, and they're seeing if the sellers grab it and ram it back down on large volume. We didn't get that, so that's a sort of signal that the sellers could have been soaked up. Now, obviously, we've got the selling on this candle, but that's potentially the insiders sort of keeping within this sort of algorithm, ready for coming price action as we break out of the wedge. And we've got more eyes on, sort of during open hours, sort of like the initial sort of opening hours. So that's one theory. I am more geared towards the upside, sort of a break above this upside wedge, and then a sort of push up, whether it being one of these algorithm channels. So obviously, once we grab this liquidity, we'd move into both the yellow and the red. So we could push up with precision buying, or we could go up sort of with the red, sort of trend upwards. Just build that bit more liquidity before this liquidity is grabbed, and then we get some precision buying. Obviously, we've got these daily key levels to break through, which might require more liquidity. We'll have sellers at those levels potentially, so it could just be more liquidity building, break through these levels, and then once we've broken through these levels, we sort of have that precision buying. Looking at the 5-minute chart, let's see sort of pre-market and after hours. As you can see, we're sort of trending upwards after hours and pre-market, keeping with this trend line. In terms of an entry, I think I'd want to break this yellow here. So once we've broken this yellow, see if we can get into one of these precision algorithms and sort of place the risk on one of these reds, probably the bottom one here, just so we don't get easily stopped out. But I don't want to rush into anything. Once the market opens, just allow price to play out and just see what other signals we're given. If the wedge sort of breaks to the downside, I'll reassess and look to see if there's any short side plays that can be taken.